Hello everyone and welcome to this Your Overseas Home webinar. My name is Roseanne Bradley. I'm a senior copywriter at Your Overseas Home and France Property Guides. Today we'll be chatting with Malcolm McDowell from Chase Buchanan Wealth Management about your financial considerations you should think about when moving to France. It's great to see so many of you with us today, whether you're watching live or on demand. Before you start, Malcolm, it'd be really great if you could introduce yourself to our audience and what Chase Buchanan does.
Yeah, absolutely. So I'm a private wealth manager at Chase Buchanan. I've spent most of my career overseas. I came back to the UK about 4 years ago, but my specialization is dealing with people who are either already offshore or about to go offshore. Yeah, so I help them with going to various countries. One of the things, obviously, they need to take care of is their finances before going to whichever destination they're going to within the EU, and that's what I help people do. I basically cover two things. I help people make money. I help people save money. Yeah, and that's really the basics of what I do. And everything that we're about to go through today is stuff that I've been through myself. I've lived in 7 different countries now, 18 years abroad, been there, done that, got the t-shirt, thrown it away again. So everything we're speaking about today, I've been through myself. Okay, so that obviously is going to help a lot whenever I'm helping someone sort out their finances and getting their ducks in a row before they go to France.
Fab, thanks, Malcolm. So Malcolm's going to share a presentation today, then we'll open the floor up to questions. If you have any as we go along, feel free to type them into your question tab. It's just on the right hand side of your screen. We do hope to answer as many questions as we can today, but if we don't get around to them all, don't worry, they'll all be sent to Malcolm and his team at Chase Buchanan after the webinar. So Malcolm, I'll give you the floor.
Fantastic. Okay. So financials, moving to France, the financial and tax essentials. Okay. I already covered this bit, so let's move on. So what we're going to go through today is basics, a very sort of high-level overview of French tax, things you need to know before you get in your car and drive over, basically. So and all the sort of things that I help with regard to that. But of course, it depends on your situation. So I'll just run through the basics. It will cover the main topics with regard to tax in France. What you're looking at here is basically the equivalent to national insurance in the UK. Okay, so that's what you're going to be paying if you're getting. That's the first bit you're going to be paying that comes off your paycheck. If you're getting an income, be that from a pension or be that from some kind of work that you're doing. Okay. This is the sliding scale for income tax in France. This changes every single year. The French change it on the 1st of January every single year. So, for example, this number here, 10,777, this was 10,222 last year. Okay, every year it changes slightly. It's supposed to go up with inflation. I don't think it does, but it makes a mimic of doing so. So, but what you're going to get to see over this presentation is the general gist of French tax. It's a very, very different approach to the UK in as far as they do tend to be laser focused on high net worths. If you're not sort of in that 10 million plus bracket, then, moving to France is usually going to be cost you a lot less in terms of tax than staying in the EU than anything else. So if you've got like an income of less than 100,000, it's generally going to be a lot less tax in France than it will be in the UK. Let's go back to what I flip back. Okay, so those are your bandings. They are going up every single year, as I said. So your tax will generally go down the longer you stay there. Okay. Again, this fits into our sort of narrative with regard to taxing high net worths. So this is the exceptional tax on high incomes. Again, it is what it is. If you've got an income of between 250 grand and 500 grand every single year, then you're going to be paying some additional tax there. Yeah, and they've got that with regard to whether you're single or whether you have a partner. So they'll get you either way. Okay, so just be aware of that. That's the general gist of French tax. It is a little bit socialist, for want of a better expression. They will come after the people with the high net worth who have got money in different countries, properties in different countries, stuff in shell companies. They do come after those kinds of people. I can help mitigate those sorts of bills, but we're only going to be doing it in a legal way, in a proper way. Okay, so just be aware of that. Okay, this is an important point to cover. Real estate wealth tax in France. A lot of nonsense written about this on the internet. So let's cover this and clarify everything so that you know exactly how it works. Okay, so you're only going to be paying a real estate wealth tax in France if your properties, stray over properties, be that one property or if you've got several properties, stray over 1.3 million in value. Okay, not 800,000 like it says on the internet. Okay, in several places. When it goes over 1.3 million, you're only paying the 0.5% on anything between 800,000 and the 1.3. So a good way to look at it is, like I said at the bottom here, if the net value of taxable property exceeds 1.3 million, then the first 800,000 is exempt from tax. Okay. Another thing that people forget is that if you move over to France and you've got a number of properties in the UK, and this happens a lot. There's a lot of people who have built up the property portfolio. They've got 5, 6, 7 properties. That's quite normal. I see that an awful lot. You have 5 years before the French start taxing that. 5 full tax years. Okay. So you'll have 5 years to do something about it, to either reduce that or just prepare yourself for whatever tax bracket you're going to be falling in. So just bear that in mind. You're not going to be taxed as soon as you turn up, unless you're buying a property that's way over 1.3 million. Okay, so this is not as bad as everyone thinks it is. So just bear that in mind. Again, this is something that can be mitigated. If you need to talk about that, speak with me afterwards. Okay. Right, taxation on movable properties. So this is I want to touch on this. I don't want to spend too much time on it. Because it's a tax that we don't have in the UK. Basically what it is a tax on anything that's not bricks, which sounds scary, but let me go through it. So, for example, let's say you've got some antiques in the house, which are expensive and are going up in value. Let's say you've got a Lamborghini that you rent out to people, or a fleet of Lamborghinis that you rent out to people. That's the sort of thing that the French are going to be interested in. And the way they tax that is going to be 30% on the income or 30% on the capital growth. Okay, so let's say you're getting income from these cars that you're renting out. They'll want 30% of the capital gains on that. Or they will be interested in 30% on the capital gains of any kind of property that you've got inside your house that is increasing in value. So I don't know, you might have a Banksy on the wall or something like that. If that's going up in value, which it probably is, then that's something they'll be interested in. It is notoriously difficult for them to collect, okay, for obvious reasons. People don't always declare what they've got sitting inside their houses, but just want to make you aware of that, just in case you do have a fleet of cars or you're quite fond of paintings and furniture and stuff. Okay, moving on. Again, that's something I can help you mitigate, but talk to me. Right, pensions in France. Okay, there's 2 things to cover here. This is a vast topic, but I'm going to make it very simple. There's 2 parts to this. One is pensions which are already in drawdown, and one for pensions which are not in drawdown, i.e. you're not taking anything from the pension. If you're taking pensions already and then you move to France, it's really very simple. What you don't want to be doing is just leaving it in the UK, drawing it and while you're in France. That's not very clever because of the currency risk and all these sorts of things. And then also having to make up the difference between the tax between the two countries. Okay. What you do when you turn up in France, if you're drawing down on any type of pension, doesn't matter if it's a final salary, defined contribution, or a state pension, you simply tell the French authorities, look, this is what I'm doing, this is what I'm drawing down. I want to pay French tax on it. And you want to anyway, in most cases, because you'll pay less. So you tell them, they'll give you a form. You fill it in, they stamp it. That then goes to HMRC, they stamp it. That then goes to your pension provider in the UK. They then pay that money out with French tax coming off it, not UK tax. Okay, nice and simple. If, however, you have a pension which is not in drawdown, that's very different. Okay, so what we would need to do is you need to speak with me about that. And the reason for that being is, and I'll keep this very brief because it's a very long story made short. Back in 2004, you have what's called the European Tax Directive. And that was all to do with the freedom of movement of people and the freedom of movement of capital, which of course includes pensions. So from that day onwards, the European Union put pressure on the UK to make this legislation. So they did that, and the UK government made the legislation in April 2006. It's often referred to, this pensions legislation, often referred to as Pensions A Day. If you type Pensions A Day into Google 2006, all this information comes up. What that meant was any kind of pension that you had in the UK, doesn't matter what color your passport, if you left the UK or you were intending to leave the UK, you had the right to take that pension with you. And all the EU were trying to do was just trying to make the pension system fairer. Basically, they realized that people weren't living for, working for 40 years for British Gas and then collecting their pension. They were doing 2 years here, 5 years here, 10 years there, and often in different countries. So all they were saying is, look, if you've done 10 years in the UK and then you move to Portugal, I don't know why that's meaning, and then you move to Portugal, why are you paying UK tax? Why would you do that? That's not really fair. Why are you paying for roads to be swept, bins to be emptied, all that kind of stuff? You should be able to take your pension with you. And so that's what happened. So there are basically two types of pensions out there. You've got your UK pensions and you've got your international pensions. If you're living internationally, you're living in the EU, you move to the EU, you should set up one of these international pensions. It makes total sense to do so. It takes away currency risk. It reduces your risk overall. It reduces your tax bill, all that kind of stuff. But listen, if you have any kind of, I won't go any further because it's a big topic. But if you have any kind of pension that is going to be drawn down, is not in drawdown yet, and it's your intention to go to France, you need to speak to me before you go. Okay, otherwise it's going to be very expensive. Okay, so have a chat with me, get in touch, contact me to discuss. Okay. Next, inheritance tax. All right, this is notoriously complicated. Okay, so I've made it as simple as possible with this presentation here. The double tax agreement in France with the UK is one of the few that actually covers inheritance tax. So what normally happens if you don't move to France, you move to somewhere else in the EU, you will still come under UK inheritance tax. A lot of people don't realize that. They think they leave the UK and then they don't have to hear from HMRC ever again. Not true. Okay, it depends which country you're in. Okay, there's this country and there's France and there's a couple of others in the EU which have this issue. So as soon as you become tax resident in France, you are subject to the inheritance tax rules in France, okay, which are a little less nice than the ones in the UK. There are things that we can do to mitigate it, okay? Talk to me, right? Get in touch. But these are the bandings here, and they are for each individual person that you pass it on to. So each one of your beneficiaries, as long as they are sons or daughters, okay? So it's 100,000 for each, and then anything above that is taxed at these rates, as you can see, okay? Yeah, if you've got a large amount that you're passing on, talk to me, we can mitigate that. There's a very simple way of doing it in France, and I'll explain what that is. Just get in touch and we'll get that sorted. so that you're not paying anything extra. Okay. And then finally, tax on assets and portfolios inside and outside of France. So if you've got anything, you move to France and you've got investments in, I know you've got a portfolio of funds, or you've got a portfolio of equities and bonds, or whatever it is. Don't think by moving to France, the French won't be interested in it. They will be. Okay. And what they'll be interested in is the capital gains on any of your investments. Okay. They'll be extremely interested in that. Okay. The days of hiding things in offshore jurisdictions are slowly coming to an end. We have what's called in the EU a common reporting standards, and in the UK as well, common reporting standards. And what that means is if you've got something in offshore bank accounts, if you're moving money around and that kind of stuff, but if you've got like money offshore and you don't tell the French tax authorities about it, there's a very good chance that they will find out. And the reason for that being is that if there's back in the day, you used to have a situation where the individual had to report. Now they've changed the legislation. They copied the American FATCA rules, and what that is the actual companies themselves, so the financial institutions, the banks and the other financial institutions, if they don't report to HMRC and all the other tax institutions overseas, they're the ones that go to court. They're the ones that get fined, and they're the ones who can potentially go, the directors can potentially go to jail. So that obviously meant that a lot of these people started reporting. And I'll give you a very good example of that. I sold my last property last year in Germany on the 1st of August of last year. On the 21st of August, I had a letter from HMRC. I hadn't done anything wrong, obviously, and they knew I hadn't done anything wrong, but they just sent me a letter just to say, hello, Mr. McDowell, we know that you've got £300,000 sitting in a post bank account in Germany. Yeah, so the reporting is alive and well. Okay, so just be aware of that. Don't think that you can move to France and the French won't know about your investments in other countries. They will find out. Yeah, so there's a very, very easy way of mitigating this. You simply put it under the French umbrella. So you can keep it in the same investments if you want. Nothing to stop you doing that. But basically all you're doing, let's say you've got a load of money in an ISA or some other investments on some kind of platform, then all you're doing is moving that over onto a French platform and getting much better mitigation, tax mitigation when you do that. Okay, so that's basically it. Again, if you're in that kind of situation, you've got anything 50 grand and above, you just need to get it underneath the French auspices. So that the French will put this rule in back in 2017 to try and encourage people to keep their money in France rather than hide it offshore. So they had to come up with something, and eventually they did, and that happened in 2017. So there's only one show in town in France. If you want to know what that is and help you sort that all out, contact me. I can set that all up for you. All that kind of stuff is very straightforward. It's just putting it under the French auspices. It's almost like an ISA on steroids. It's absolutely fantastic. It basically helps you mitigate inheritance tax, capital gains tax, income tax, all these things. But obviously, that's the incentive for moving the money into France. But like I said, you can keep it in the same investments if you're happy with those investments. Okay. So yeah, contact me if that's your situation as well. And that's it, basically. Like I said in the quote, we all have to pay tax. That's a given, but there's no need to leave a tip. Okay. And we certainly don't want HMRC or anyone else, for that matter, sending us Christmas cards. So if you want to get your ducks in a row before going to France, please talk to me. If you don't, it could be quite expensive. All right. So just get in touch. I might be able to help you, I might not, but I'll certainly be able to give you all the information that you need. And if we can do some work together, that's fine. But if we don't, that's fine as well. And over to you, Rosie. Let's have some questions.
Thanks, Malcolm. Really interesting stuff there. We've got quite a few questions coming in. First off, can we ask, What is the corporate income tax for France?
Okay, that can vary depending on the size of your corporation, but it's 26.5% in France. Okay, I know a lot of people like to set up small companies in France, and the French actively encourage that. By the way, the rules in France for entrepreneurs and the support for entrepreneurs in France is much better than the UK. So if you're going to do that, then you'll be surprised what kind of support you can get in France. It's very, very good. So yeah, 26.5, and it goes up if you have a huge company over 250 million. It goes up to 27.5, I think. Yeah. Rosie, can't hear you. You've gone mute.
Sorry, didn't take myself off mute. Okay, we have a question from Paul. In the event that I need to sell a property in France and, God forbid, move back to the UK, what are the tax implications, if any?
Yeah, no tax implications as such. What I would do if you're in that situation, and what you've done and moved your stuff over, you've done the right thing and moved your stuff over to France in terms of your investment. So that last slide that we spoke about, in terms of, if you had ISAs and all that kind of stuff, and you moved them over to France and put them underneath there. If you needed to go back to the UK, there's definitely no issue with the pensions. You can go back and still have your overseas pension. That's great. If you move back and you've got money sat in France, then what I would advise you to do is just take your money with you. Yeah, whatever kind of investments that you've got. Pensions and investments have to be looked at very differently in that regard. Your pension will stay where it is. Yeah, your money in terms of what you've got in bank accounts, all this kind of stuff, you take that with you. Yeah. Are there any tax implications? No, not as such. No. But it doesn't make sense, again, to keep, from a tax point of view, there's no sense in keeping your money in France while you're in the UK. The same thing while you're in France is no sense in keeping your money in the UK, because there are basically vehicles which are designed so that you take your money over. That's why they've done these things. So yeah, no tax implications as such, but you will pay less tax as long as you take your money with you, but the pension stays where it is.
Fab, thank you. A different type of vehicle now. Do you have to pay tax to bring your car to France?
Right. Okay. Only if the car is less than 6 months old. Car, caravan, motorbike, doesn't matter. What they're trying to do is protect their car market and their car sellers in France. And I think most countries in the EU do that. So as long as you've got a car that's more than 6 months old, or any kind of vehicle, camper van, whatever, that's fine. But if it's less than 6 months old, they will charge you. There will be a tax for that.
Stephanie's asking, is the 9.7 national insurance payable on all income regardless of bandings?
Yes.
Lovely. Nice and straightforward.
Yeah.
Laura is Canadian and will only be receiving income from Canadian pensions. Will she need to pay tax on that in France? She'll already be paying tax on this income in Canada.
Oh, excellent question. I'll have to get back to you on that. I don't know what the double tax agreement is between Canada and France. I imagine that there is one. I very much doubt there isn't one, but I'd have to check. So if I very much doubt that you have to pay tax twice. The way it would work then is, like I mentioned before, you then simply tell the authorities, I'm going to be drawing down on a Canadian pension. The French tax authorities will give you the form. You fill that in, they stamp it, the Canadian tax authorities stamp it, and then the money will come to you with French tax taken off. I will be very surprised that there's no double tax agreement between Canada and France, but off the top of my head, I don't know. I'd have to check that. Yeah, I mean, I'd have to do a very quick check on Google, which I don't have time to do now. But if you've got any questions about that, contact me afterwards. But I don't think you're going to have a problem. Just go through the normal process and contact the French tax authorities when you arrive.
Okay. Narendra asks, what is Plus Values IMM non-resident 2090? Capital gains tax or social security tax?
Are you referring to one of the
Was this on one of the slides?
I think it might be, yeah. I can't remember off the top of my head. Hang on. I'm referring to this one here. I don't know the French names for these, by the way. I can't remember them all. But yeah, so that's well, you have to talk to me afterwards. I'm not exactly quite sure what you mean by the question. So drop it to me in email and I can get back to you.
No problem. Premium bonds, what should be done for these?
Okay, so I mean, premium bonds are pretty liquid, but they don't give you a great deal of money. So look, you can keep them in the same investments, but it's the same thing. You have to put it under the French umbrella. Yeah. So there's no point in keeping them where they are because any kind of gains on them will be taxed heavily by the French. Okay. All you're doing is putting your money from your left pocket to your right pocket. One's got a hole, the other one doesn't. Yeah. Put it in under the French auspices so that it's French compliant. That's all you need to do. Again, talk to me if you want to go about doing that.
Cool. I think we've got time for 2 more questions. Lauren is working for her UK employer and living in France. Her employer's not had to deal with this before. How does she pay taxes in this situation?
Yeah, so as I mentioned before, she just needs to tell the French tax authorities that she's working for, who she's working for, and they will give her the forms that she needs to fill in order to pay tax in France. If she doesn't do that, then what will happen is you'll pay tax in the UK, and then the French will soon find out about it once you become a tax resident in France. That usually takes, I mean, she's like you said, she's already a tax resident in France, so she's probably done more than 183 days, right, in a particular tax year. So she just needs to notify the French tax authorities, look, I'm getting this income, I want to pay French tax on it, not UK tax. Yeah, and then they will give her the forms that she needs. That's not something I can do for a client, unfortunately. They have to do that directly with the tax authorities themselves. They won't allow a third party. I've tried. They won't allow a third party to intervene and try and help with that. So you need to contact them directly and say, look, I'm getting this income from the UK. I want to pay French tax on it. It's a very similar setup to what it is when you're paying income on a pension as well, as I mentioned earlier. Yeah. So contact the French authorities directly as soon as you can.
Lovely. Would you have to tell HMRC about that as well?
Yes, that's part of the process. So that document that gets filled in is actually stamped by the French and also stamped by HMRC. So yes, His Majesty's Revenue and Customs will automatically know about that. There's actually a form that you need to fill in when you leave the UK as well. Most people don't, so don't worry about it. Technically, there's a form that you should fill in, an HMRC form when you leave the UK, but don't worry, if you haven't done it, you won't get into any trouble.
Okay, we've got time for one more question. All the rest will be sent to Malcolm and his team, so don't worry, you will get an answer.
Yeah.
David's asking, he has no real pension, so I'm looking at setting up a geek business, which will be my only income of note. Am I right? There's a different threshold before paying tax as opposed to having a salaried income.
No, you will be taxed on that unless you put it inside a company. Okay, so if you're going to be, it depends how you set it up. If you've got a company and then you pay yourself a salary and then you take dividends and all that kind of stuff, that's one way of doing it. Or if you've got whether you do a limited, that's one way of doing it, or a sole trader as a geek is probably more likely. So yeah, sorry, I can't really answer that question. It just depends on how big the GEET is, whether you want to set up the French equivalent of a limited, or whether you want to do a sole trader. So yeah, kind of the answer is depends. Unfortunately, you need to speak to me. I need to understand the size of the business, what kind of income is coming from it, and then I can kind of say, okay, your best bet is to set up a main company and then set up a subsidiary or whatever it is. There's lots of different ways of skinning that cat. So you just need to tell me, okay, what the type of business you're doing, what kind of income is coming from it, estimated, and then I can tell you sort of what the best structure would be.
Lovely. I think that's about all we've got time for today. Thanks, Malcolm, for all your insightful tips and advice. Before we finish, I would like to invite our listeners to leave us a review on Trustpilot if you found this webinar remotely helpful. We strongly recommend you get in touch with Chase Buchanan and Malcolm directly to discuss your requirements in detail. We'll be in touch with their details shortly, or you've got Malcolm's email on the final slide. Thanks, Malcolm, for sharing your knowledge with us today, and thank you to all our listeners for joining. Thanks again, and happy property hunting in France.
Take care.